Hello and welcome to another episode of The Mark Moss Show, where we talk about, of course, the decentralized revolution, the way the world is changing right before our very eyes, from a world of centralization and it's sort of breaking apart. And of course, we look at it through the lens of politics, finance, and technology so we can navigate through this. And I'm trying to bring you some education to kind of change the way you see these types of situations so you can be better prepared. Some late breaking news. And of course, I try to bring you some experts and some special guests so you don't have to listen to me all the time. And that's exactly what we have today. Of course, I've been talking about the problems in the energy sector for well over 2 years now at this point. And so I brought in an expert in the energy markets to talk about this today. And I'm sitting down in studio with James Hill. James is the CEO of a new company called MCF that's trying to have a solution, trying to solve the problem with the energy crisis over in Europe. So, James, thanks so much for joining me today.
Thank you very much, Mark. It's a pleasure to be here.
Yeah, what I like to do, what I try to tell other people to do is, really go to the source. And we want to find people who are kind of in the trenches, boots on the ground, doing the work, And so I know you've been in this energy sector for a really long time. And so anytime I can get a chance to sit down and learn from somebody such as yourself, I'm super excited about that. And hopefully everybody in the audience is as well. So, James, I made a video about 2.5 years ago saying, warning, an energy crisis is coming, not just for California and the U.S., but even for the world. And I was saying that because of regulations that were going in. We have two sides. We have supply and demand, right? That's the equilibrium of prices. And so if demand stays the same, turns out we still need energy to live. So if demand stays the same, but supply goes down, that causes a problem. And that seems like what's happened. Lots of regulations that strangled new investments into the energy sector, as well as then obviously crimping the supply. How has that been? What have you seen in regards to that? And how has that been in the energy markets over the last several years?
The focus has really changed over the past 10 years to the green revolution and the stampede to renewables. And of course, the green non-fossil fuel environment. The transition in the eyes of so many of these, I call them dreamers, they want immediate transition, whereas those of us that actually provide energy understand that any real transition to another type of energy resource will take decades and decades to accomplish. You can't just build 2 million EV cars and distribute them out to everybody because there's a lot of lead time in not just building them and getting the resources to build them, but you have to, of course, find the energy to charge them up.
Yeah.
Here in California, they actually had some days where they told you not to charge your EV vehicles because of the brownouts and whatnot that we were experiencing. So there's been a real change here in the last couple of years, and the war in Ukraine has really brought that to the forefront in that you talked about supply. When there's a radical disruption in supply, it brings forward all of those issues that everybody likes to ignore. Right. The ability to provide energy to people to, heat their homes, and more importantly, keep the factories running. Jobs, if factories don't run, people don't have jobs. If people don't have jobs, they don't have money, they can't buy food. Right. This is a real problem, okay? This is a real problem.
Now, James, to help us kind of frame this up a little bit, why don't you, I've obviously done some research on you, which is why I've invited you to come on and talk as an expert, but maybe just for the audience, kind of give us a background of yourself. What projects have you been working on? How long have you been in the energy space? Kind of what have you done so far, et cetera?
Well, you can tell by my gray hair, I've been around a little while.
Well, for the audience that's not watching on video, he has gray hair. And if you'd like to watch us on video, go to the Market Disruptors YouTube channel, and then you can watch us as listening. But anyway, James, go ahead, please.
There you go. Well, I've been in the energy industry over 45 years. My degrees are in geology. I have a master's degree in geology. And I was trained at both the U.S. Geological Survey and Chevron over many in my initial years of career. And then branched out on my own, started my own businesses, and then participated in a number of different public companies, all of which were pretty successful and returned a good return to the shareholders.
Couple big wins you want to talk about?
Well, it was kind of amazing because when we are in our first hostile takeover where we were taken over, I found out that banks not only have a deposit withdrawal limit, but they have a deposit limit where you can only deposit so much money in one day. So I had to go to the bank twice. It was a good day for me.
Yeah, that's what we call a good problem to have.
Yeah, that was a good. Yeah, I mean, I knew they had withdrawal limits, but I didn't realize they had deposit limits. So it was a good day.
And was that a natural gas company?
That was actually a company here in California where we were a publicly held company on the Canadian Venture Exchange. We were primarily producing heavy oil in California.
Okay.
And we got taken over by a company based out of Kazakhstan called Nations Energy.
Okay.
It was a good day. It was a very good day.
Okay. And then you moved into, energy markets are kind of energy markets. So whether it's oil, natural gas, they kind of flow the same. Most places, natural gas comes out of the ground with oil as well. So that was an easy transition to kind of or not even really a transition, it's kind of just staying in that same market.
Yeah, well, basically the next assignment I had after that was international in Albania. Very few people realized that one of the largest oil fields in Europe was in Albania. Because of the secrecy and whatnot involved in that particular country. Yeah. That was a very, very good project. Again, it was heavy oil, but we took the production from 600 barrels a day up to about 19,000 before it was finally sold, and that worked out very well. And then, of course, we moved into natural gas exploration in the U.S. and made a discovery in Oklahoma, which is currently still producing about 4,000 barrels of energy equivalent a day, oil and gas. That's called Calibri at the moment. I was involved with that pretty heavily. And at the time we were exploring in Europe, so our major focus was in Poland, Germany, and Spain 10 years ago. And it was a difficult environment at the time, and we found it difficult, and it's much better now. That's basically the bottom line, is that things are much more friendly to energy development in Europe now than it was 10 years ago.
So you've had quite a bit of experience both in the United States markets, but as well as Europe. You rattled off quite a few over in Europe. Would you say that the situation in regards to supply demand is much more dire, much more problematic over in Europe right now? They've been more restrictive on the supply side of that equation?
Well, Europe has been drunk on Russian gas for decades, and Gazprom was very, very effective at controlling the price in a region where development within the European Union itself, in other words, energy development on projects within their own borders, was effectively stifled and killed. It was very, very difficult for companies to make a good return on their investments at the time, and also the fact that through their influence, the restrictive environments that the governments produced on exploration and producing companies was pretty severe 10 years ago. It really was, and a lot of that was, I believe, politically motivated.
To the point you said, they've been sort of drunk on Russian gas. And I think maybe what you're saying is that there's been so much supply from Russia and probably at such a good price, I think you said they were kind of subsidizing that Europe seemed to just kind of like, well, let's just turn off all our supplies and let's just get it directly from them. Is that sort of what happened?
Pretty much. The European Union in 2022 imported over 60 billion cubic meters of natural gas from Russia. And of course, that's been severely restricted now with the war in Ukraine and the actual step away from the European Union to the use of, not just natural gas, but oil assets from Russia as well. And this is where the energy crisis really originated, was that they just weren't prepared for it. And of course, the idea is that this is not the first time Russia has done this. This is actually the second time they've done this. The first time the European Union didn't really pay attention because countries like Germany and Poland weren't really as strongly affected. But Slovakia and Bulgaria and a few of those in the first restriction of the gas supplies through Ukraine were severely impacted. Slovakia had to shut down factories, and there were some instances where houses went cold because they just didn't have energy.
When was that?
Boy, I'd love to rattle off the year for you, but it was the first time that they restricted gas through Ukraine because they were claiming that Ukraine wasn't paying their bills.
So like
which they probably weren't, maybe? But around 2014 maybe.
So was it also a problem because regulations against energy, specifically oil and natural gas, have kind of gotten more restrictive, and what we've seen, like in Germany, for example, is this big move to shut down their nuclear reactors, and now they've lost their natural gas, and so they were even more dependent on it than they had been before.
They were. They were less dependent when they had their nuclear reactors. Now they're a lot more dependent.
Right.
There are 63 coal-fired power plants in Germany right now, which are currently burning coal. And, of course, this is in the absolute opposite direction of where they really want to go as far as carbon emissions into the environment. Yeah. So, they're really shooting themselves in the foot by following the policies that they're currently following.
Yeah. And of course, a lot of people probably have seen the clip of Trump over there warning them, hey, this is going to happen. Like, don't put yourself dependent on Russia. This could happen. But here we are. We have this kind of war broke out, the whole world sanctioning Russian energy. What about the Nord Stream pipeline? Because the Nord Stream pipeline was really to send oil directly from Russia to Germany, I believe, right? And then
Nord Stream 1 was the first pipeline to go around Ukraine. A lot of natural gas that originally went into Europe went through pipelines in Ukraine, and of course Ukraine had a tariff on those pipelines to increase their cash flow. Nord Stream 1 and Nord Stream 2 were, I believe, attempts by Russia to circumvent Ukraine in anticipation of the invasion, which of course happened. Now that those two pipelines are destroyed, and goodness knows who destroyed them, the preferential method of getting energy and gas into Europe is going to be through Ukraine. And of course, what sort of reparations and tariffs is Ukraine going to put on Russian gas to try and rebuild the cities that Russia has destroyed? So, I mean, this is an open question, and of course, that's even going to restrict the price even more, in the future. I mean, I actually envision, the price going up significantly once the war ends.
So you're saying that even if, at some point this comes to some sort of a resolution, we don't know how that plays out, but after the resolution happens, potentially Russia, if Europe wants to get Russian energy, it would have to go back through Ukraine. They would probably, most likely, to your point, put some type of sanctions on their reparations, et cetera. And so even if Russian energy could flow back into Europe again, at some point it probably will, at that point it will probably be way more expensive, is what you're saying.
It's quite possible. This is my vision only. But it makes sense. I mean, let's face it, if you were Ukraine, you wouldn't allow Russian gas to come through at a cheap price. I mean, let's face it.
Yeah.
It's just...
And what other option do they have? I memean, they would put it on tankers and get around Ukraine that way? Or
well, Russia doesn't really have the LNG facilities that the U.S. and Qatar have. A lot of the energy supplies that have been going into Europe now is LNG. Liquefied natural gas from the U.S. and Qatar. And this is really what's averted the energy crisis this last year in Europe, has been the supplies of natural gas, in the form of LNG supplied from the U.S. and Qatar.
Yeah, so let's talk about that. So a lot of people, including myself, thought that this last winter could have been really, really bad. And it seems like crisis was diverted.
It
So
really
we
was.
we thought this was going to be catastrophic. So energy is shut down, and people are going to freeze in their homes, and that didn't seem to happen. So why is that? Did we not read
Well,
the
a lot of it
situation
had
right?
to do, yeah, a lot of it had to do with the mild winter that Europe had. I
So they
mean,
got lucky.
I was just in Poland last week, and the weather was beautiful, much warmer than it normally is. So the fact that that Mother Nature cooperated and the LNG supplies were diverted to Europe from the U.S. and Qatar really helped, along with the energy conservation that Europe put into effect in staving off what could have been a very, very bad crisis.
So they got lucky. It was an abnormally warm year, so that really helped them out.
Yep.
Two, they were able to get supplies from the U.S. and Qatar to help offset some of those losses from that they lost from Russia.
Yes, exactly.
But
And really, the big factor that nobody really thinks about is the fact that China wasn't competing for all of those LNG cargoes because of the COVID lockdown. They locked down their society, and because of that, their energy use went way down. Now that China is coming out of their COVID lockdown, we expect to see a lot more competition for those LNG cargoes. And if that happens, of course, the price is going to go up.
that's a good point. So China, which is needing to import all of that energy because of their lockdown, their economy was kind of shut down. They weren't needing the supply that they had in the past. And so that allowed that kind of extra capacity to go to Europe. It wasn't being competed against. So to your point, if they have to now fight over this, the prices would go up big time.
Yep.
Now, it looks like since Russia is not sending their oil and gas down to Europe, now it's trying to divert it to China. So if China picks up all that slack from Russia, will that possibly prevent that sort of outbidding situation you were talking about?
Well, it's not just China that's taking the oil and gas from Russia. It's also India. India and even Saudi Arabia is importing some Russian oil, which of course they refine and then turn around and sell it to the West as refined products. So yeah, there's a lot of maneuvering going on in the energy world, and let's face it, energy is always going to find a place or a home, but again, markets are markets, and the ease to which Russia has been able to transport energy to Europe because it's kind of sort of right next door, kind of overcomes some of these other markets which are farther away, and it takes more money to get the oil and gas there, if you know what I mean.
Yeah.
So Europe is always going to be a very viable market for Russia, but again, the problems of the war and the sanctions and the pipelines being destroyed is going to impact that for many years to come.
Now let's talk about the markets for a minute. So, I like to kind of keep things simple, and then we can kind of build on top of those. But of course, prices are, somewhat of an equilibrium between supply and demand. And so it seems like, well, if you can look at the supply-demand equation, you can kind of figure out where these markets are headed. And so when there was a reduction in supply, again, demand kind of staying the same, then prices should go up. And they did. The prices of natural gas spiked to insane highs throughout Europe, the UK, et cetera. And to the point you had kind of talked about earlier, even with like Poland and stuff like that, we saw in Germany, which is the economic engine of Europe, factories did have to shut down. And some factories like BASF moved, and like they're over in China now, right? And so like that deindustrialization is a massive problem, and a lot of that may not be coming back. And so these prices were very problematic, prevented production of fertilizer and even some food production, et cetera. But somehow the prices of natural gas fell through the floor. And as a matter of fact, they're sitting at 25-year lows right now. So how are we at 25-year lows in natural gas with this massive impact on the supply side of that?
Well, again, it's a commodity, and supply versus demand controls the price. Also, the fact you have to realize that prices in Europe are still 3 to 4 times the prices that we get in the U.S. for the same energy unit. So yes, they're at lows, but those lows are relative, if you know what I mean.
Sure.
The economics involved are still quite favorable to energy development in Europe, and I foresee that they're going to stay that way for quite a while. And in fact, I think they'll stay that way forever. But that's just me.
They'll stay that way forever. What being higher than the US?
Economic. In other words, the idea, of course, is if you can produce energy within your own borders, of course, your transportation costs are going to be lower.
Right.
Of course, it also brings into the fact that energy security of energy within your own borders is important, because that's a supply that you can always rely on, and nobody can close the valve on you, if you know what I mean.
Yeah, well, it seems like that would be a big push for national security, having energy within our own borders. So let's talk about that. So, Europe has been, you said, drunk on Russian energy. Europe's kind of become dependent on Russia for that energy. Is that because Europe doesn't have energy? Like China doesn't have energy, they have to import it. But does Europe not have energy?
Oh no, Europe has quite a nice energy supply. It's not nearly at the levels of course, the major producers like Russia and Saudi Arabia and the U.S., but they have significant energy supplies within their own borders. I mean, Romania, for instance, has been producing oil and gas since the early 1800s. A very, very long time. So no, there are significant energy resources within the European borders. It's just that Russia has, structured the supplies to be very, very easy and kept the price at a level which restricted the development of energy resources within the European borders. And of course, now a new factor comes into play, not just price, but energy security. In other words, the most secure energy supplies that you can have, as we've talked about, are within your own borders.
Right.
And the EU has finally started to recognize this, and also recognize the fact that the transition to renewables is going to take decades.
Right.
Literally decades to accomplish on any reasonable scale. So because of this, the EU has declared natural gas green, a renewable energy resource. And moving forward, that's a critical designation, because they realize that natural gas is the cleanest burning hydrocarbon that you can have, and that the transition to renewables is going to rely on that energy for decades to come.
Yeah, so that's a big piece of this, right? So on top of it, getting their cheap energy from Russia, so not being, it's not economically viable potentially to get it out of, the European Union, the EU. But also on top of it, they had these draconian regulations in order to kind of usher in this green transition, which was by saying that, natural gas was bad, was dirty, et cetera, wasn't approved. And that way more and more could move to this, renewable transition, which to your point, could take decades if it could even happen at all, and that's a whole different conversation. But now what they're seeing is like, hey, this isn't working. It's not working in Germany. Turns out we had a very low wind year in the UK, and so we need to probably go back to the natural gas. And so they've redesignated. I think that's a big piece, right? Because now they've redesignated it. That means like people in the EU now could start going and getting natural gas and bringing it back to market. Is that right?
Well, it's never really left the market. The idea is that they've always been powered by hydrocarbons. When you talk about a transition, you're talking about transitioning from hydrocarbons to something else. The idea of going with wind and solar, is great when you think about the idea that the sun is free and the wind is free. But when the wind doesn't blow and the sun doesn't shine, as you pointed out, you've got to fill in the energy with something that is reliable and constant. A lot of people don't realize that it's magic when you flip the switch on the wall and the light comes on. No, right. There's an awful lot that goes behind that switch, and what makes that light not only come on but stay on. You have to have a constant supply of energy, and natural gas is the preferred fuel. And the EU has finally recognized that.
Yeah, you don't want to just like go to turn on your light and all of a sudden it's not working because it's just not windy out right now. Or
it's not magic. It's not magic. There's actual people and energy supplies and equipment that goes to keep that light on.
Yeah. Peter Zion has done some good charts, and he has some charts that show where the wind is strong enough to power wind turbines, or when the sun is sunny enough to power solar. And then he mapped that out to where it's within 1,000 miles of city centers, because you can't transport it very far. And Europe doesn't look very good on the wind or sun when it comes to that. We've talked about, the problem, the supply, demand constraints. I think one of the biggest pieces is the problem of running out of energy and to be dependent on one source has really dug in. Everybody sees that front and center now. From a national security perspective, from what happens to, your manufacturing base and things like that. The solutions aren't very good because I suppose you can continue to import from either Qatar or the U.S., but again, there's national security that comes into play. If we don't have supplies, we have a problem, and so we probably have an interest in securing that. Now, the EU hasn't been getting their own energy out, and as you said, there's lots of good pockets all over. But now with this redesignation, and then again the like I said, the punch in the gut of realizing how big that problem is, I could see there being a big push, and I think that's what MCF is doing, trying to bring new natural gas markets or new natural gas to the markets in Europe. I mean, fill us in on how you see that.
Well, I explored Europe 10 years ago, and the opportunities now are much, much better. As you mentioned, the regulations and whatnot 10 years ago were a lot more extreme, and it took years, literally, to get a project done and a well drilled. Current administrations and whatnot, we have a partner in Austria who got a well drilled and permitted in 6 months. Which would have taken years in the past. So there are some real changes in the attitude in Europe and in the regulatory environment, which is going to help us along. MCF Energy was a newly formed public company to aggressively pursue projects focused on the development of natural gas resources within Europe. As I'd mentioned, because Europe has been drunk on energy from Russia for decades, exploration for energy resources within European boundaries has been underfunded and, quite frankly, ignored for over 40 years. The wild thing is because of this, MCF is a first mover on many high-quality projects that have been around for a while that just couldn't get funded. Me being involved with the European community for, over 10 years, has allowed me to not only be involved with a number of these projects and identify them, but watch them just sit there and mold over the years because there was just no funding.
Yeah.
Well, now, we are coming in and we're high grading and we're picking the best projects to develop within the European Union because, like I said, the EU is suddenly realizing that the best energy security you can have are those resources which are found within their own borders.
Right.
So as I mentioned, MCF is a first mover to develop on these projects, and it's our goal to become the company for investments, the kind of go-to company for investments in gas exploration and production in the European Union.
Yeah.
So
I love that. It kind of goes against, it's that contrarian play, which is, buy what's hated sort of a thing. And so natural gas has been hated in Europe, and now we've seen the problems from that. But also I like to play the trend. And so we're kind of at this interesting point where it's still kind of hated, but yet the EU just changed the designation. And so now we have the trend on your side as well. I like that. I had met, how this got onto my radar and why this kind of set up this interview is I was at a Vancouver Resource Investor Summit speaking, and I met Ford. And Ford is one of the founders. He's had, I think like $3 billion exits in the energy market, specifically over in Europe. And then, you have General Wesley Clark from NATO Supreme Commander. I think he's knighted or something like that over there. So massive connections over there. Is that a big piece of how you think you're actually able to pull this off over in Europe, connecting all those?
Well, that's a big part of it. Ford Nicholson and Wesley, General Wesley Clark, I've been involved with them in my last two ventures, and so really? I knew them well. Yeah, I knew them very, very well. And the other people involved, which are also very, very large players in the energy and mineral markets, These are publicly available names: Gordon Keep and also a number of other noted energy investors are involved with MCF Energy. And really, if they had not been involved with this, I wouldn't be involved with it. Frank Justra, for instance, owns over 10% of our company. Yeah. He's a big investor. In fact, from the numbers that I last saw, over 70% of the shares of MCF Energy are held by insiders. So, they believe in what we're doing, and they believe that we can have an impact on the energy market, not just within Europe, but in other areas. But we're focused on Europe at the moment because that's where the need is. That's where the opportunities are.
Mm-hmm. So, it seems challenging, but I guess, like you said, with this redesignation, it starts to open this up. Now you said now there's funding there. So the goal is, I guess, and you tell me, but is to kind of connect some of these natural gas resources and get it flowing from within the European Union directly. And I think you're working in Germany and Austria. Is that correct? And so if Germany can get its own natural gas in Germany, it can sort of insulate its manufacturing sector and potentially save itself. I mean, is that kind of what the goal is? What's the plan?
Yeah, that's the idea. Well, the plan is to do just that. I mean, we're reviewing projects in not just Germany and Austria, but all over the European theater. We've gone as far east as Azerbaijan, as far west as Spain. We've looked at projects in offshore UK, and we've also looked as far south as North Africa, with the idea that the pipelines going across the Med will get energy into Europe. The two projects that you're referring to, the first one in Austria is a very, very large geologic structure called an anticline that's you can see from space. I mean, this thing is massive. It's over 100 square kilometers. There's gas in the area. There's an old well that was drilled that produced gas. We're going to step up higher on the structure and drill a well here, hopefully by this September, which could prove up, 500 billion cubic feet of natural gas, and even more if the conditions are there, which of course could have a good impact on the energy scene in Austria. We're only 18 kilometers from a pipeline, so the idea is that that we can bring that gas to market pretty quickly. Our German assets, we actually purchased a privately held German company called Genexco. Not because just for the gas resources which they've got between 85 to 100 BCF of proven natural gas resources, but also for their prospect inventory. The staff of Genexco had been exploring Germany for almost 40 years, so they kind of sort of knew where all the bodies were buried, if you know what I mean. And we've got 4 or 5 concession applications in right now to the ministries for additional resources, which we'll be developing within Germany. So it's as I mentioned, it's a it's a prospect-rich environment with some very, very good prospects, and we're focusing a lot of our effort in these areas to bring a quick return. In other words, a quick, high impact to the market and also create a lot of shareholder value.
Yeah. Well, I mean, we need a quick solution, that's for sure. Energy is vital to life. I mean, you have to have energy, so we're going to have to fix that problem. And when we go through this turmoil, one of the best ways that people have protected their investment portfolio has been gold for 5,000 years. And in the banking crisis like we're seeing and the world breaking apart, gold could be one of those trusted places. And, for me, I've been using a company called Universal Coin and Bullion because you want to make sure you're getting your gold from a trusted dealer. There's a lot of fake gold going around these days. And so for me, I like Universal Coin and Bullion. And the founder, Mike Fulgen, has a very special offer for my listeners to get 1 ounce gold American coin, the most popular gold coin in the world, at its dealer cost and only a 3% markup over spot price, plus free shipping. Call 1-800-UCB-GOLD. Again, 1-800-UCB-GOLD, or go online to universalcoin.com/Mark Moss. Or give them a call, mention my name, and you're going to get that special offer on the 1 ounce gold coin, and it all ships for free. Now, if you've just been tuning in, you're listening to the Mark Moss Show. We've been sitting down with James Hill. He is the CEO of MCF Energy. The ticker is MCF. And they have a solution for the natural gas or just the energy problem over in Europe. Check them out on their website for more information. They're doing amazing things. I'm paying attention to them, and you should as well. Again, that's MCF Energy. Ticker symbol is MCF. And that's what I got for you today. Thanks so much for listening.